Thanks, Kaylee. All right, Zach, we are back for another carrier update. I see we have the outbound tender rejection index. We're creeping up, headed into the holiday weekend.
Yeah, we are. It's Memorial Day weekend, the week before Memorial Day weekend coming up. So capacity is going to get tighter. That's just the nature of the game. It doesn't matter. Every single year this happens. How much, however, is the big question. You know, we're at a 24.5% tender rejection rate right now. We have been on a downward trend since, late March, early April. Things have been gradually coming back down, not significantly so by any means, 26, 27%, all the way back down to 24.5. That's not a dramatic drop by any means. So, and what we've seen over the past, really year, but specifically back in February, any kind of disruption whatsoever has an exaggerated effect on capacity. So anything that comes into play here, it's like a rubber band. It's already pulled tight, and ripples are felt a lot more significantly than they were in the past.
Yeah, those snapbacks hurt, don't they? I mean, we have the snapback here from the winter polar, the polar vortex that sent, reefer rejections went up, I think, to 50 during that time. So they've come back down, but again, have seen also some pressure upwards. What are we seeing on the volume side of the house?
Yeah, let's look at our outbound tender volume index combined with our lead times. A lead time index, of course, the amount of time it takes between the request to the pickup date. So, roughly if you're asking for a pickup next Friday, that's about a 5-day lead time. And we're seeing both of them start to increase. So tender volumes, again, trending up slightly. And lead times, of course, starting to move back up over closer to three days. We're right around 2.75 days at this point in time, which is relatively elevated historically. Like back when things are looser, I should say, we see about a 2.5-day lead time. This has been elevated, significantly over the last year or so as shippers have figured out, hey, we need to give carriers a little bit more heads up in order to gain that capacity back. So we do expect those lead times to start to creep up, as well as these volumes, as they're going to have less time to ship this freight. You're losing a full day, but also drivers are going to take vacations too. There's less people available. Shippers are going to take vacations. So what that means is they try to get a bunch of freight out the door when they can. They schedule stuff for when they're leaving to make sure that it's going to pick up while they're gone, et cetera. So it all comes together in a one giant, tight package for the freight market that just isn't simply as capable of handling as it has been in years past.
Right, definitely a compression here. We already, like as you said on the previous slide, when things are as tight as they are, any slight disruption that pulls capacity off the market or increases volumes has an outlasting and lingering effect. I did have a question for you, Mr. Sultan. That 2.75, does that include weekends or are those business days?
Those are business days.
Okay.
So that's why I said about 5 days. You exclude the weekends because that's not typically a pickup or delivery window, even though there are still operations that operate. But the business days, obviously, we see it in our data. There's just not a lot of activity over the weekend in terms of back office activity, anybody scheduling any freight pickups or deliveries in that manner. It's very limited skeleton crew type action. So we eliminate the weekends from that data. If we look at the map next, just to see where in the country we're seeing some undulation here, weekly tender rejection rates combined with market share, our weighted rejection index to show you where all the action's happening the most significantly across the country. Ontario, out there on the West Coast, again, we see this on a 2 to 3 week cycle out west, where we see these rejection rates fall and then they start to increase significantly once again. And then it's about a 4 to 5% tender rejection rate change. So it's a very significant undulation.
Yeah, especially when you're in the biggest, one of the top 3 biggest markets in the country.
Yeah, and it's kind of weird. It's as these carriers are going out and coming back. It's almost like a wave where they're able to get in position. And of course, it's produce season, so reefer capacity out there also having an added impact. The Houston market, an interesting one to watch over the last bit. We pull up their chart next to take a little deeper dive into Houston. This has been an erratic market. You can see the tender volumes, trending higher in the orange, and then the tender rejection rates, of course, trending higher as well over the last bit. They're starting to come down here in the near term, but this market is poised to continue to see, a lot more activity because of all the imports. Right. The import volumes, of course, feeding this area of the country right now. Looking at our IOTI though, that I don't have pulled up here, there may be a sign that this market or this area may see some softening here in the next few months as the import bookings have started to slow down coming into this particular area.
You know, it's crazy that we're saying this, but I think they might actually welcome that. I think the port workers, the longshoremen, and the people that are draying from there, I think they might welcome a little bit of moderation here.
Yeah, and I say it's relative. You know,
right.
when I say that it's coming
down from all-time highs.
It's not necessarily like it's going to collapse or anything, but they may see a little bit of easing. Of course, there's congestion all over the United States right now at the ports and in these freight markets, and Houston's simply not used to having this amount of volume come through it. So it does have a little bit more significant impact. A lot of short haul volumes out of Houston going into Dallas, et cetera. You know, shippers just trying any way they can to get freight moving in the country.
That's right. Shippers trying to get any inventory they can into the country, and then once it gets here, it's even more difficult to get it moved. So lots of problems for shippers right now. Lots of elevated transportation costs probably through the end of the year.